थ्री केटाहरूमा पढ्ने भनेको एकाउन्टिङ फर फाइनेन्सियल एन्ड म्यानेजरियल डिसिजन एन्ड कन्ट्रोल यो कुराहरू चाहिँ हामी पढ्छौँ है। त्यसैले यसमा के युनिटहरू छ भन्ने कुरामा हामी अलिकति डिस्कसन गरौँ अनि त्यसपछि फर्दर अगाडि जाउँ। यसमा चाहिँ हामीले जम्मा पढ्नुपर्ने युनिट भनेको चाहिँ 6 वटा डिफ्रेन्ट युनिटहरू पढ्छौँ है। र as a master's level students, basically we focus on the decision making aspect, so that when you are talking about the management accounting in your second semester as well, basically we acquire some knowledge about the cost and we try to implement the knowledge of cost in the decision making aspect. Similarly, in the MBS third semester as well, we try to use the knowledge, whatever the knowledge we obtain from the financial accounting and the management accounting. These informations we try to use for the long-term and the short-term decision-making aspect. More focused for preparing plan and controlling in the changing business environment. That's why in the second semester, I talk a lot about accounting information. Why do we need accounting information and where we have to use the accounting information and what are the major implications of accounting information in our decision making aspect. So that in the previous semester, we discussed about the 5 major important objectives of management accounting. In 5 different objectives of management accounting, at that time I discussed the literature based on Ronald W. Hilton. Professor Hilton prescribed 5 major objectives. Among of these 5 different objectives, one or the first objective of management accounting is to provide the information. So information is the most important aspect. In this semester also, we are going to discuss about the informations. We have a lot of informations. In the last chapter of MBS second semester, we discussed about the importance of information as well under the control, management control system. When we are talking about the informations, I remember that I always give examples relating to the importance of accounting informations. Again, I gave the same examples. If we are the manufacturer of the torchlight, in that torchlight, basically, there are 2 different major components. One is the body of torchlight. The another one is the small bulb. When we are talking about the cost, the body of torchlight, definitely the manufacturing cost is much more higher in comparison to the small bulb contained in that torchlight. Okay, for example, the body of torchlight income per unit is rupees 50, whereas the bulb manufacturing cost is rupees 105. That means the 10% of the cost in comparison to body of the torchlight. is about the bulb. Now, the same bulb we are able to purchase from the market for paying rupees 3. Then what's happened? The 3 rupees is our buying cost, 5 rupees is our manufacturing cost in the given problem. Okay, now as a manager, what should we do? Do we want to buy it from the outside supplier, or we want to have a manufacturer continuously? That is the major issue. But in the given case, the most important is about the informations. We have to make a decision under 2 different alternatives. One alternative is buying alternative. The another one is about the manufacturing or make decision. Now, as a manager need to make a decision whether they are going to buy it or manufacture it. At that time, I remember that when I give this example, our friends in the classroom may divide. Some prefer to buy it because we are going to save 2 rupees per unit. Then thousands and thousands of the torchlight, we can save a lot of money. But some of them divided and prefer to manufacture within the organization from the perspective of the quality of the bulb, because quality is the most important aspect. The small bulb, the torchlight, basically torchlight main job is to provide the light. If the bulb is worse, then whatever the quality of body is doesn't make any sense. So that some of you prefer to manufacture within the organization from the perspective of the quality of the bulb and from the perspective of the regular supply of that bulb to manufacture the torchlight. Now, your decisions should be based on the informations, not haphazardly. That is the major issue. That's why the information is a very important part to prepare the plan for the future activities. So that as an accountant, you have a lot of information. When you provide all these informations, that means you have a balance sheet, you have an income statement, you have a cash flow statement, you have a purchase detail, you have a sales details. Every details, if you provide to your manager to make a decisions for particular buying or manufacturing the bulb, your manager will be overloaded by the information and unable to make a decision. What it means then, the information should be a relevant one. Only those informations as an accountant you have to disseminate to your decision makers, those which are required to make that decision. That's why the information is first what? The information should be a relevant one. Only the required informations to solve a specific problem, the management accountant should be disseminate to that information only to your decision makers. So that when we are talking about the information, that should be the relevant one. The another important part about the informations is about the time. You should have to make a decision by tomorrow. That means as a management accountant, you should have to deliver the informations before to make the decision. That's why timely information is the another important aspect. Time. That means after expiry of the time, the informations should not make a better result. So that information should be timely one. Now, whatever the informations I gave you regarding the manufacturing of the bulb is ₹5, buying cost of that bulb from the outside supplier is only ₹3. Are these informations adequate to make a decision or not? Adequate, relevant one, timely one, adequate one. When we are talking about the ₹5 of the manufacturing cost, as a management accounting, we need to disseminate information about the details of that ₹5. What is the amount of material cost? What is the amount of direct wages cost? What is the amount of variable manufacturing cost? What is the amount of fixed manufacturing overhead cost, and so on? Because among of these costs, some of cost we can avoid by buying the component from the outside supplier, and some of them we cannot avoid. For that, in the second semester, we discussed about the relevant cost and irrelevant cost, avoidable cost and unavoidable cost. For that, at that time, I remember I gave you an example about the motorbike or motorcycle or the taxi. When you use your own motorbike, there are some costs which involve. Basically, the petrol cost, fuel cost. The another one is about the insurance costs, and yearly you have to pay your taxes to the government. So that forget it, the other expenditures regarding the repair and so on. Suppose if you use your own motorbike, then you have to expend the three major component of the expenditure is about the fuel, which is based on the kilometer run, and the periodical cost, that is insurance and the taxes to the government. On the other hand, instead of using your own motorbike, if you want to use the taxi for your transportation purposes, then what are the different costs involved when we use the taxi? The only one cost involved is the taxi fare. Now the compare between these two. If you use the taxi, then what cost of your motorcycle you can avoid? If you use the motorbike, then what are the different costs you can avoid from the taxi services? In between these two different alternatives, if you use your own motorbike, your expenditures, petrol you need to expend, insurance you have to pay, taxes you have to pay, but you can save the taxi fare. So that if you use your own motorbike, you can save your taxi fare. So that the taxi fare is your relevant cost or avoidable cost. Instead of that, if you are going to use the taxi, then what are the different costs you can avoid from the motorcycle? You have to pay the taxi fare. You cannot avoid it, but you can save the fuel cost of the motorbike. But you need to pay continuously the insurance cost and the taxes to the government. In that situation, actually what happened, petrol, either you have to expend petrol or taxi fare. That's why petrol or taxi fare is your relevant cost. That is avoidable cost. Nature, from the behavior aspect, is a variable cost based on the kilometer. But regarding the insurance and the taxes, you have to pay, either you use your own motorcycle or taxi, you have to pay. That is the unavoidable cost. That is the irrelevant cost. By behavior, it's a fixed cost. Now the important aspect is the irrelevant cost as well as relevant cost, which you need to understand during making the decisions, make or buy decisions. So that when we are talking about the 5 rupees of your component cost, you should have to disseminate the information adequately. Means you should have to explain the breakdown of this 5 rupees: material cost, labor cost, VMOH cost, fixed manufacturing overhead cost. Why I am talking this? Because the finally 5 rupees of information is not adequate one. Out of 5 rupees, you should have to give the information about the avoidable cost as well as unavoidable cost. That's a very important to us, because there are some of the costs are related with the supervisor salary, which you cannot avoid it. Some of the costs may be the rent, that may be the unavoidable cost. But you can avoid the direct material, because when you are going to manufacture, you need a material cost. When you are buying from the outside supplier, you can avoid it. It's a relevant cost. But regarding the rent and regarding the insurance cost, regarding the property taxes, regarding the supervisor salary, it's a very difficult to avoid. So that these costs are still make a continue even though you purchase it from the outside suppliers. That makes your decisions different. Another important part, if you buy it, for example, it's the same. Okay, if you buy it, then what will be the impact in your cost, total cost? What will be the impact on your profit? Because if you buy it, then how are you going to use the available resources? That means you have a bulb unit. It's a separate unit. There is some sort of machines, storage, everything. How are you going to use it? Whether you are going to keep it idle, unused as well, or you can use it by manufacturing the other different type of bulb from where you can generate the additional contribution margin, or you are going to rent out that facilities to other firms or the other manufacturers. That's why you can generate the rent income. What it means, you should have to explain about the opportunity cost as well. So only 5 rupees and 3 rupees information is not adequate. So we have to think about the adequate information. So information should be the relevant one. First I talk about it. Then after that should be the timely one. The third is about the adequate one. Now the fourth important aspect is, when you are going to disseminate the information, that should be understandable by your recipient, so that you have to generate the report in such a way that the reader can understand it. Reader can use it. So the consistency is the another important aspect. Suppose you provide the information to the users, that is your manager. Now what happened? You have a different branches. In the one branches, you valued your stock based on the absorption costing, what we studied in the second semester, using the full cost, total cost. But another branch stock is valued according to the variable costing, that is not consistent one, that provide the misleading information to the users, your manager. That's why the information should be the consistent one. This one method should be applied to the different department as well. That's why in this semesters, basically we are going to discuss about the informations and use that information to make a decision making. That decision making may be for the short term or the long term, but we always focus on the planning and controlling process in the changing business environment. That is the main objective of this course. In the 6 different units, in this semester, we are going to discuss about the 6 different units. The first one is about the financial and management accounting informations. Again, we discuss the same thing, what we discussed in the second semesters and the today discussions. In the second unit, we are going to discuss about the financial statement analysis and performance. In this unit, probably you guys already studied in the previous classes. Okay, Sarthak, do you have any question? Sarthak? In a
No, sir.
financial state, no, okay, but actually, I saw you raised your hand, that's why. Okay, no problem. Okay, now regarding the financial statement and performance, what we are going to discuss. Okay, regarding the unit one, I already told you that we are going to discuss what we discussed in the previous classes in the second semesters. The mainly we are going to discuss about the concept, need, and sources of financial informations. We are going to discuss about the why do we need the management accounting informations. We are going to discuss one more things about the management accounting importance in the competitive business environment. What we discussed in the second semester as well. Again, we are going to discuss the same things. And another important aspect is about the control tools, okay, and the control system. All these things basically we discuss in the second semester. Don't worry, we will discuss very briefly in this semester as well. In the unit second, we are going to discuss about the financial statement analysis and the performance. In this unit, basically we are going to discuss financial accounting aspect. When we are talking about the financial statement, basically we have a very important aspect is about the accounting standard issued by the accounting standard board, ICAN. Okay, that's why we discuss very briefly about the concept of the our accounting standard and the international accounting standard and FRS as well. That means financial reporting standards. And we are going to discuss in this unit is about the financial statements. When we are talking about the financial statement, mainly the balance sheet, income statement, and cash flow statement. These are the very important integral part of your financial statement, which we are going to discuss. Not only these things, the another important aspect is changes in the equities, shareholder equities, and the notes to the account is the another additional importance integral part of your. In a second unit, we are going to discuss about the financial statement, basically balance sheet, income statement, and cash flow statement. And we try to use in financial statements to analyze the financial data to make investment decisions. So that how can we analyze the performance of the organizations. If you are the manager, you need to analyze the performance measure of your organizations within the organizations or with the other organizations. That's a very important aspect. Suppose you have a ABC company, then what do you need? You need to make a comparison within your organization, means what is your result right now in comparison to last year within the organizations. But your ABC company is not only one organizations what you are dealing. The same type of business, same type of organization, the others also. That's why probably you want to make a comparison with the XYZ, which is doing the same things what you are doing. Now, what is your performance in comparison to XYZ? So you try to make a performance measure. That's why to make a performance measurement, you have a different alternatives. What you can do, the very simple, you can perform a financial statement analysis by using ratios. When we are talking ratios, you know it very well about the ratios, but I would like to only explain when the ratios has been emerged to make an analysis of the financial performance or financial ability. At the end of the 18th centuries, the only one ratio has been emerged. That is the liquidity ratio. Liquidity ratio has been developed by the institutions to know whether the buyer can able to pay their debt in time or not. When? During the end of the 18th century. Then what happened? Then after so many different ratios has been developed in beginning of the 19th centuries regarding the solvency ratio, turnover ratio, profitability ratio, and so on. But there is a turning point comes in 1966 and 1968. These are the two different years. There is a turning point of the financial statement analysis. In 1966, Bieber developed a model, bivariate model actually, developed a model to know whether the firm is going to bankrupt or not. That has been modified by Altman in 1968 by using the multivariate model. And Altman developed a score that if the company's value is less than that Altman score, then is it a possibilities for the failure or not? In between the certain range, what should happen? If above that range, what will happen? That's why the Beaver and Altman, 1996 Beaver and Altman 1968 is the turning point for the financial statement analysis. But what we are going to do in this semester, we are going to discuss about the financial ratios. What you previously studied. Okay, there are different ratios, but additionally, you studied about already current ratio, liquidity ratio, turnover ratio, solvency ratio, profitability ratio, everything you have already studied. But in this semester, I am going to focus on measuring the productivity, profitability, activity, stability, and the possibilities. These are the ratio additionally we are going to discuss. That's why I'm not going to focus all these ratios what you already studied. But on the basis of that, we are going to discuss the additional few ratios which are very much important for your performance measurement. Then after, we are going to discuss about the value added analysis and the performance measurement. And you know it very well. Probably you studied in your BBS first year at that time. Okay, value added analysis. Then after, we are going to discuss about some key ratios regarding the return on investment and the residual income. Then we need to discuss about the cash flow statement analysis. First of all, you have to prepare the cash flow by using the direct method and indirect method. Then after, you have to interpret the results. Okay, these are the things you have already studied. But regarding the other issues, accounting for decision making, pricing decisions, and the investment analysis, these are new for you guys. Regarding the decision making, we are going to discuss the 5 different important measures and pricing decision as well, and the investment analysis. Probably you studied about the sort under the condition of certainty, but this time we are going to study about the investment analysis under condition of uncertainty as well. Okay. Okay, now detailedly we are going to discuss the 3, 4, 5, and 6 unit, what we are going to discuss and what are the different components within this chapter we are going to discuss in the next class. And in the next class, we are going to discuss about the financial and management accounting informations and the components. Okay. Regarding the textbook, you can use any textbooks which you have, and you can use any other ebook available online. You can use it. Okay. But in the class, I'm going to use that book. Okay, Accounting for Financial and Managerial Decision and Control by Ratnaman sir. I'm going to use that book in the class, but I already told you that you can use any book what you have, and you can use any ebook available online in these units. Okay, I already told you that these are the 6 different units which you have to discuss, and to get the knowledge about these 6 different units, you can use any book what you have. Okay. Okay, do you have any question